What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. In today's show, we'll be speaking with my great friend and excellent trader, Raghee Horner. And in my final thoughts, I did a poll this last week on if you could pick one chart, what would it be? And the weekly came up quite a bit. So I'm going to go to the charts and show you something I'm seeing on the E-mini S&P weekly chart. But before we get Raghee on the line, each and every week, we are getting new traders to develop your edge. And I want to reference something. If you go to activetrader.cmegroup.com, scroll down to the bottom, key takeaways. Click on this. My good friend Craig Bewick puts out great key takeaways on the market. You can catch that at activetrader.cmegroup.com for all levels of traders. Hang tight while we get Raghee on the line. Raghee, how you doing, my friend?
I am doing fantastic. It is amazing to see you.
I'm loving the t-shirt, Raghee. That is awesome.
This is the way.
This is the way. Well, today we're going to talk about your way, your edge. You and I we've had so many conversations on the podcast, in private. We've talked so much about indicators and technicals and macro, but we haven't really talked too much about specifically your edge. Talk to us about your edge.
My edge comes from, I think there's always two edges any trader is going to have. They're going to have the edge that they have internal, all the things that are going on between the ears. But I think there's a lot covered on the psychology of trading, dealing with all the different habits that we have to deal with, working with our mistakes and our ego and our fear and our greed. The edge that I think at the end of the day is the external edge, that edge that we find on the chart or on our price action, whether it's volume, whether it's volatility. And for me, that edge has been a combination of price, yes, but also volume, time, and volatility. I put those together and I think I've got X-ray vision on what the markets are telling me.
Expand on that a little bit. Give us an example of that.
Okay, fantastic. So price, I think for a lot of traders, price would be what? Price would be support and resistance lines. Price would be trend lines, which are rudimentary and very powerful. I think too many people leave those very rudimentary basic things in the dust because they're after some sophistication in their level of trading, which I think is always a pitfall that many traders fall into. So beyond price, so support, resistance, trend lines, major psychological levels, double zeros, single zero, whole number levels on a chart, basic price. Then we've got price-based indicators. So if it's a stochastic or any kind of indicator that's using that arithmetic of open, high, low, close, divided by, multiplied by, those are all price-based. And those are great. And I think a lot of traders stop there. But then we want to take the next step. And for me, the big eye-opening thing came from actually my floor trading buddies, because you guys know something that I think a lot of people forget. Size does matter. How many contracts are trading in a particular level? What kind of momentum did we see as we broke through a particular level? And so I think price is incomplete. Price doesn't tell the whole story. It tells the beginning of a story. It sets the story, but then volume starts to add the richness. What kind of participation? What kind of enthusiasm? To give the market a little bit more of a personal type of description. Then there's time of day. I know that I'm going to behave a certain way at a time of day, and I think the market behaves in different ways at certain times of day. So we add in that next layer of time, and then finally volatility. One of the things that I know, and a lot of traders know anecdotally, is that all 24 hours of a market are not created equal. Futures trading between 9:30 and 11:30 is a very different animal than futures trading between, say, the Asian close at 4 a.m. Eastern to, say, 7 a.m. Eastern, or 4 p.m. Eastern to 7 p.m. So different hours, different levels of volatility. You put all that together, and now you've really got a true picture of the market that transcends just price, where I think, unfortunately, a lot of traders just stop because they're not exposed to ideas that transcend price, because they're told price tells you everything, tells you a lot, but it doesn't tell you the whole picture.
I love this. So it's an accumulation of all of those things. But what I'm wondering is, how did you get to that point of recognizing that that was your edge? Because there's a lot there.
Yeah, there is a lot there. So how do we get specific to that edge? The edge for me, it's kind of a weird edge, but the edge came for me to just acknowledge that what I was doing was ineffective. And I think that's something that a lot of traders can't get to the point to say, well, how much better can I get? where are places that I think I can get better, and where are the places that simply aren't working, that I'm just beating for no reason, trying to expect a different result with the same action. So my edge came from just being harder on myself than the markets could be on me. So that pursuit of how can I be better, where are the holes in my trading, while not ignoring my superpower, right? One of my main tenets of life and trading are, look, Aquaman doesn't mind that he can't fly. He can talk to fish, right? So we all have our superpower. Batman has the great gadgets. Wonder Woman's got an invisible plane. We all acknowledge what our superpower is, but I can have a more complete game. Um, to use a baseball analogy, which I love, we're hitters at the plate. The more pitches that I can recognize when they're being thrown at me, the more likelihood I have of making contact. So my edge came from just being tougher on me than the markets could be. And then I realized, Rog, you've been subscribing to a price only type approach for 20 years. And I have to give credit to a lot of my floor trading buddies. I have to give credit to listening to people talk about volume. I have to go back to my pursuit of, say, volume weighted average price, and not time based volume, not the volume that happened between, say, 9 and 9:05 a.m., but what price did the volume occur at, which is a significant paradigm shift for most people looking at volume. They might say, well, Rog, I look at volume, not time based volume, price based volume.
So to summarize this, because I'm taking this in because I've known you for so long now, and we've had so many different conversations. It's when I think about Raghee and her edge now, I'm thinking that it's you recognizing a situation where all of those stars have aligned, and at that moment, to you, that's where you feel you have an edge in the market. Now, the question I want to ask is, how do you know that that is a true edge? Is there stats? Has something proved that to you? Is that something that you've just seen and just your results getting better? How did you actually get to the point of saying, that's it?
So, yeah, I think so far, and thank you for these conversations. I think they allow so many of your viewers to watch traders from different backgrounds and different markets and see what's going on inside of our crazy skulls. So let's take price, volume, volatility, and time and say, okay, Rod, that's kind of helpful, but it's still sort of fortune cookie wisdom. Where does the rubber meet the road? The rubber meets the road for me, where I found my edges. I'm an exhaustion trader. So I'm looking at time, let's say, as a day trader. I'm not going to look for exhaustion in the market in the same way between 9:30 and 10 that I would say after 10 a.m. Eastern. The clearing range is a different animal than the post-clearing range. The lunchtime, midday doldrums are a different animal than the post-bond and last hour of the day. So that's one way to look at exhaustion by way of time. And when I'm talking about exhaustion, I think it's the minority of traders out there who are looking to buy floors and sell ceilings. I'm not a two-way trader. I think you're probably a little bit more of a two-way trader. You're
Yeah.
probably one of the only successful two-way traders I know. That's a superpower. I don't think most people, us mere mortals, we can't do that. That makes you rare. And I think if a lot of people try to be Anthony, they're going to get run over. I think you've got a set of skills with your background that allow you to do that. But I don't think it's something that everybody can do. I've been doing this for 32 years. I can't do that. So I would say let's pick a side. Let's do some directional bias on the market. Find exhaustion levels. Again, those exhaustion levels are going to come from, are we at the say one or two standard deviations from volatility ranges using volume? Are we seeing that the market sold off down to some support level? Are we seeing that I'm at a time where I'm post a clearing range volatility, back and forth? So now I feel a lot better that the buyers are going to step in, support the floor, and I want to ride that wave that they're then going to start to create. So I don't know if that's a little bit more practical, but that's how I process it.
So aside from time, price, volume, volatility, did I nail that? Did I get all four of
Mm-hmm.
them? Okay.
Perfect.
What else is something that Raghee would say is her edge? And the reason why I asked that is because you gave me my first actual bracelet. You remember when you gave me? I don't have that one anymore. So everyone knows I wear these all the time. It was the first one ever, and I'm so appreciative of you. And at that moment, I talked about how, I was kind of in the dumps about a couple of things. You shared something with me, I'm talking about this because mindset is such an important thing for me. We talk about mental edge. How much is mental edge? How much is it of statistical edge, experience, Because I know that there's other things in your background that helps really, I think, almost quantify that edge that you're talking about with the time, price, volume, and volatility.
So I don't know where we all derive. I mean, I think at the end of the day, the thing that we're sort of talking about is confidence. How do I
Okay.
derive confidence, right? For you to have done what you did in your other trading life, not your in front of the computer trading life, my gosh, the level of swagger you need to do what you did, you developed, I think, a certain kind of confidence. How do I develop a confidence? So to me, confidence has a little bit of a formula. Confidence is comprehension. Do I understand the approach that I'm using? Do I understand what it is that I'm actually getting myself into? And then confirmation. I see what I know working. Probably the best analogy is a diet, right? If we're trying to get healthy, we're going to the gym, we're trying to lift more, whatever it is, we try an approach and then we see, wow, I'm either losing weight, I'm gaining muscle, I'm lifting more, I'm able to run further. So the knowledge we have is tested in the real world. We see that it's yielding a positive result. And then you just keep that loop again and again and again. And all of a sudden, this very natural thing emerges, which is confidence. You can't fake it till you make it in the markets. It'll eat you alive. So I think if there's a edge that is external, not external, internal, right? It's
Yes.
that confidence. So whatever a trader needs to do to develop that confidence and to protect it. People talk about protecting capital a lot, and that's fine, that's fair, it's true. But here's the fact of the matter. If I blow up my account tomorrow, I live in Florida. I don't care if I have to Uber, mow lawns, or clean pools. It doesn't matter. I will get another grub stake, and as long as I still have my confidence, I can get back to work. I can regain the
Yes.
success. But if I lose my confidence, we've all seen that golfer on the green who can't sink a 2-foot putt. Best clubs in the world, best coaches in the world. You're a golfer. You lose that confidence, you're screwed.
Raghee, I always enjoy our conversations. I'm so thankful to call you a friend. Thank you so much for taking the time to speak with me today.
My friend, you are a magical human, and thank you so much for the time. I always enjoy seeing your face, and you're just doing some great things, helping some people out, and it's an honor. It is.
Thank you, Raghee. You're the best. Hang tight, traders. We'll be right back with our final thoughts.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
Final thoughts for today, traders. It's Thanksgiving week. I want to wish all of you a very happy and safe Thanksgiving. Now, in my interview today with Raghee, she's so awesome. She's such a good friend of mine and really just a fabulous trader. What I really took away from hearing her talk about her edge today was the detail. She knows her edge inside and out. And I think that all traders could take a page from Raghee on really knowing your edge, defining it. Now, let's go to the charts. In my intro, I talked about how I put out a poll. I said a poll, but it was actually a question I put out on Twitter. What would be the one chart you would pick if you could only have one chart to look at? For me, I said 60-minute. And I saw a lot of people put out the weekly chart for futures traders. Really didn't expect that. But here we are with the E-mini S&P weekly on TradeStation using my indicator. And I want to show you something because it's something that I look at. I don't look at it all the time. And I don't talk about weekly charts too much on this show. Actually, I don't think I ever have. But one thing that I see is very, very important to me on the weekly chart is we had that big move lower. And how many times have you heard me talk about this? Sharp move. We had the Bollinger Bands going out, and they started to come back in, and they formed two peaks. What I consider unfinished business, when we take out a previous high or a low, and we had those peaks, is this peak now can be tested. Remember, you can get my indicator for free on anthonycrudele.com and pull this up on any market. And if we see a big rally here in the S&P, well, what's a big rally? I mean, at this point, we've already seen a huge rally. But if we do see an extended rally from here, 3960 is a huge area for me. And I think that if I'm long going into it, that would be an area no matter what, I would be taking off long positions. And if I got some setups on the daily or even my 60-minute, this is an area that would have big time confirmation for me to start to look at shorts. Of course, like I always say, we have to wait to see the reactions. We have to get there first. We may never get there. Who knows? But that's a key area that I'm looking at on the weekly charts. Remember, if you have any questions or comments, please put them down below. You could also follow me on Twitter at Anthony Crudele. Don't forget to check out Instagram at Anthony C. Crudele. That's a wrap for today. See you next week.